Well, howdy there, folks. Welcome into today's video. Boy, do we have a lot to get into in this one here today. We are going to speak about a stock that is emerging that is a easy money stock. We're going to speak about, after all these massive amount of earnings that just came out, which we're going to go through the numbers. I'm going to show you the actual reports, what was good, what was bad. After these reports, how does it make me feel about PayPal? How does it make me feel about Meta's earnings coming? Do I feel more confident or less confident in those companies and what they're going to report? And a whole bunch to get through in today's video, folks. I appreciate everybody joining me as always. Thank you so much for being here. Thank you for being subscribed. I got a beast of a video put together for you guys. I've been prepping this one for a while here, okay? All right, guys, so right off the top, I actually wanted to speak about kind of the market action and something interesting I'm kind of seeing, right? So today, small caps, we're rolling, right? You know, if I look at my best stocks here today, Fubo and Honest, right? Two of my smallest cap stocks I pretty much own, 7% move, 7% move. Corsair is a small cap stock I own, 5% plus move, right? And then the high growth stocks, Elf, Palantir, Shopify. In a day like today, makes you feel like, oh man, maybe we're turning a corner. Maybe like small caps can start to come together. Some of these high growth stocks can come together, right? Which the small caps, they've been teasing us for pretty much a year now at this point in time about like coming back and like you thinking they're going to come back. Oh, here comes the small caps. And they just let you down time and time and time again, right? And the stocks just seem like they flounder and they have a great day and then they have a bad day. And it's like, okay, we just gave back all our gains. It's great, right? And basically what the small caps are waiting on is treasuries. We need treasuries to peak before small caps can really start rolling. When you just have treasuries just going up and up and up, it just puts an immense amount of pressure on the small caps and just people don't want to own those sorts of stocks in general. If I pull you up a 6-month treasury, for instance, this is a 6-month treasury the past 10 years, right? And so, you know, there's definitely some periods, this is actually a 5-year chart I have up for you here. There's definitely some periods where small caps were rolling, right? And certainly in this time period, small caps were rolling. But then once we started getting the hints of, rates are going to start going up, and then they just kept going up and up and up, that was just damage to small caps. Now, recently, a lot of these small caps have kind of been bottoming out territory, and the reason being is now it looks like treasuries are starting to peak. We can't get too confident in that, but I can tell you, if treasuries peak, if we have had treasuries peak, what does that mean for small caps specifically? That means very good news, okay? If treasuries have truly peaked, that takes this immense amount of pressure of like treasuries just keeping going up because those are some of the most affected companies by treasuries just continuing to go up and all the ramifications that happen because of that, okay? So if you want to root for small caps, if you want to root for the IWM, the Russell 2000, if you own any small cap stocks, root for treasuries to have peaked and either stay flat for a while or go down. Because either one of those scenarios definitely would be a welcomed thing when it comes to these stock prices. Because it really doesn't matter what's going on with the company's business models. If treasuries just keep going up and up, there's just going to be unrelentless pressure on the stock prices. I've seen stocks that report actually phenomenal earnings and are trading at ridiculous valuations that are in small cap land. It doesn't matter right now. If treasuries just keep going up and up and up, that's just the way it is. Okay. Now, if you want to think about dividend stocks got some great news here today, okay? Verizon stock just had its best day in almost 15 years, folks. Verizon stock was up about 9% here today. That's phenomenal news. Dividend stocks are another group that has just been devastated by treasuries just continuing to go up and up and up. And you've seen it in these, I take you guys through these dividend stocks, these safety stocks, all the time on the channel over the past few months, right? And showing you the collateral damage that's going on with those stocks. If you want those stocks to start having a little more fun, we need treasuries to peak. It all comes back to treasuries. It's actually not as important as far as earnings go with at least the dividend group and the small cap group in general, right? Coca-Cola reported today. They went up and their earnings were pretty flippin' flapjack and phenomenal. If you look at their operating revenues, we're up 8%. If we look at their selling general administrative expenses, that was their weak spot. That was up 12%. Gross profit was up 12%. So operating income was only up 6% here, right? But overall net income and EPS was up about 9%. So I gave Coca-Cola a B grade. Wasn't as good as Pepsi, but it was good earnings overall, and that is something that makes you feel a little more comfortable, I guess you can say, about the state of these dividend companies. After Pepsi reported phenomenal earnings and then you have Coca-Cola report good earnings, this is some good news in regards to this, okay? Now, 3M, another dividend stock a lot of people have been looking at recently. The stock's been trading, at 5 or 7 or 10-year lows, like ridiculous, okay? And this is a stock a lot of people are looking at recently. The stock popped over 5% here today, and that's because Their earnings were, I guess you can say, less bad than feared. These were still an F-grade income statement, okay? So check this out. Net sales was down year over year, almost $300 million, actually over $300 million. As far as cost of sales, that was the only green part that went down. Selling general administrative expenses was insanely high, but I believe that is because of a bunch of legal stuff, so do keep that in mind. R&D was, roughly in line with last year, a little bit lower, but operating expenses were obviously, way higher because of SG&A costs, because once again, I think that goes back to litigation there. Operating a loss of $2.6 billion for 3M. They lost $3.74 a share. It's an F grade if you're going to look at the GAAP basis. If it's an F grade income statement for 3M, but the good news is we have reached a moment in regards to 3M where it looks like it should get better from here. And a very important thing you always should remember in the stock market moving forward, folks, is when a story has reached max bad in regards to a stock, that will mean the stock's likely going to start going up. And that's a perfect example of 3M here. That, income statement is trash, right? It's not good. It's not good. But the stock pops 5% plus. Ultimately, at the end of the day, 3M stock has started to recover here recently because a lot of people say, this was it. 2023 is as bad as it gets. 2024, things start to get a little better. And then 2025, things will get massively better for the company. That is the view, right? And so that's something you can see out there in the market overall. Now, if we go ahead and take a look at Microsoft stock, it is popping after hours. What were the Microsoft earnings like? In regards to these Microsoft earnings, folks, I got to say, it was freaking phenomenal. I mean, absolutely phenomenal, okay? If we look at their business breakdowns, I love the way Microsoft kind of breaks down each business, okay? This is a percentage change year over year on a GAAP basis, generally accepted accounting principles. Microsoft Cloud was up 24% year over year. Office, commercial products and cloud services up 15%. Office 365 commercial up 18%. Office consumer products and cloud services was a little weak. That was only 3% growth. LinkedIn was a little weak at only 8% growth. I believe that's because the job market has slowed down, especially in the tech field. Dynamics products and cloud services up 22%. Dynamics 365 up 28% year over year. Server products and cloud services up 21%. Azure and cloud services up 29% year over year. Windows OEM, Windows commercial products and cloud services were a little on the weaker side, 5% growth, 4% growth, 8% growth, respectively. Devices was the one weak spot really in the earnings. That was down 22% on a year-over-year basis. Xbox content and services was up 13%. Search and news advertising, excluding traffic acquisition costs, TAC, was up about 10% overall for the company. Those numbers are very, very good. If we look at the actual income statement for Microsoft, it is flipping phenomenal, okay? The only bad thing you can find in it, okay, and I gave this income statement a grade A. The only bad thing you can find in it is products revenue was down a little bit year over year. It was down about $200 million. Services and other was up over $6 billion, about $6.5 billion. Incredible number. Total revenue came in at $56.5 billion versus $50.1 billion in the same quarter last year. Product revenue, obviously, as far as the cost of revenue, we certainly are in a spot where that went down substantially, almost $800 million. Services and other went up, but you got to understand, if you're going to sell more of anything, whether it's cloud or whatever, your cost is going to go up. So that's why I have it in blue there, not red, right? If you look at total cost of revenue, I think they kept that in line very nice. $16.3 billion. That's incredible. Gross margin came in at $40.2 billion versus $34.6 in the same quarter last year. They kept R&D in check. They kept sales and marketing in check. I also like how Microsoft splits off sales and marketing from general administrative. They kept that in check. Operating income came in at a shocking $26.8 billion versus $21.5 in the same quarter last year. Net income came in at over $22 billion versus 17 and some change in this quarter last year. EPS on a basic basis, $3. On a diluted basis, $2.99. That's not it, folks, okay? The cash and cash equivalents plus the short-term investments is up to $143 billion, billion dollars on Microsoft's balance sheet. Flipping phenomenal. Somebody asked me a question on the Twitch live stream today, but shout out to everybody that was on the Twitch live stream. That was absolutely insane. Okay, absolutely insane. Tomorrow's going to be even crazier, and Thursday's going to be even crazier. But today's live stream, shout out to everybody that was on there. People asked me, or somebody asked me, why don't you own Microsoft stock? Okay, why don't I own Microsoft stock? So, I answered that question by basically talking a little bit about its valuation. What I should have just said is I'm maybe a little mentally challenged because that's about all I can say. Like, I should own Microsoft stock. When you look at the numbers this company puts up, quarter in and quarter out, I should own it. I should own it. There's really nothing I can say. Like, it trades at about, if I recall, anywhere between 26 and 29 times this year's expected numbers. I mean, for a company that reports these sorts of numbers quarter in and quarter out, like, what can I say? Like, it's freaking phenomenal. Like, I should honestly own the stock. They got one of the sickest income statements consistently quarter in and quarter out. They have very predictable growth. And on top of that, they have a balance sheet that is creme de la creme. So I should own Microsoft. I should own Microsoft stock. That's the bottom line in regards to that, okay? Satya Nadella deserves the most amount of respect of almost any public company CEO, because when he took over Microsoft from Steve Ballmer didn't do a whole lot of much with that company over that 13, 14 years while Steve Ballmer was the CEO of the company. And Satya Nadella comes in and just fundamentally changed the business model and everything. It's like a night and day difference. Like, Microsoft was seen as like the boring stock that no one really wanted to own up until Satya Nadella took over this company. And nowadays it's like one of the most magical business models in the world. Absolutely incredible. The one risk, I think, to Microsoft stock is the U.S. government, right? The U.S. government seems like they're trying to come down, or they're threatening to come down on almost all these big tech companies. And it seems like it's just going to be a matter of time before maybe they try to do something in regards to Microsoft. I do believe that Apple will likely be before Microsoft, though. So I think that could be potentially many years away in regards to Microsoft. And you could be talking about maybe the U.S. government's in a different situation. Maybe they're not going to come after them. Maybe things have changed by then. But it seems like we're in this period right now where the government wants to come after all these big tech companies. In last night's video, I alerted you guys to the situation where they're coming after Tesla now, right? The government is. And Elon Musk's company there. And so it just seems like the government, they need money right now. Let's just be honest, okay? The deficits are awful. I don't see them getting better. And so I think they're trying to come after a lot of these big tech guys right now. And they're usually easy targets. And they got a lot of money. You hit one of these companies with a several $billion something, fine. That's several $1 billion in your pocket. And in today's deficit, a few $1 billion doesn't really make a difference. But hey, it keeps the lights on, I guess you can say. So that's what's going on there, okay? I don't know how this got in here, but shout out to Bishop Gorman. They should win the high school football national championship this year. This is Visa. You want to know how the economy is doing? Look at these numbers right here in front of you. This is Visa. This is how commerce is run. Visa, okay? I gave this income statement an A-, which means the economy is actually doing very good right now, folks, okay? Much better than everybody had predicted. It was all predictions of recession. Visa said, no. Services revenue is up 12%. For the company. This is on a GAAP basis here. This should be on a GAAP basis. Yeah, GAAP basis. Services revenue up 12%. Data processing revenues up 13%. International transaction revenues up 10%. Other revenues, wow, shockingly up 35%. Now, client incentives were up 20% for the company. So that is one negative I could definitely point out for the company overall is just, client incentives being 20% is a pretty high number. Net revenues up 11% for the company. Total operating expenses were up 13%. That was the one thing I really didn't like in this Visa earnings. I don't like to see operating expenses up more as a percent than net revenues. And we're talking about a 2 percentage point difference there. Ultimately, if I see net revenues up 11%, I want to see operating expenses up maybe 10%, 9%, 8%, 7%, something like that ideally. Not up 13%, outstripping the percentage growth there, okay? Now, net income grew 19% and 22%. So ultimately, at the end of the day, if you're trying to say, is there a recession, just based upon what we've seen from some of these companies so far, absolutely not. Absolutely not. Doesn't mean it's not coming, 6 months from now, a year from now, 6 years from now, 10 years from now. But as of right now, we're not seeing anything in the data. I can tell you, if we were going into recession or in recession, you would see a company like Visa reporting potentially down revenues or like very slight growth, like 1%, 3%, 5% type revenue growth, not 11%, right? That's a very strong number there. Now, am I more confident or less confident in PayPal with their earnings coming, right? Which PayPal earnings should be, if I recall, PayPal earnings should be this upcoming week, okay? And obviously PayPal's a stock I'm adding aggressively right now and plan to continue to basically until the first quarter of 2024, right? So based upon what I've seen from American Express's last quarterly results, based upon what I've seen from Visa's latest quarterly results, looking at PayPal. Now keep in mind, I was, very confident in PayPal to begin with, right, in terms of their earnings. But after seeing these results, it has made me more confident in PayPal's earnings that are coming up here. I have no doubts that PayPal's earnings are going to be good this quarter, next year, the following year. I have no doubts at all, which is why I look at that stock and I'm adding as aggressively as possible. I do have questions if the stock price is going to go up in the next 3 to 6 months. I don't know if that's going to happen. That might very well not happen. But in terms of the business model, I have zero doubts in regards to PayPal's business model. And so, yeah, if anything, those Visa earnings, they just made me more confident in PayPal overall. And I can't wait for PayPal to report, which usually, if I can't wait for a company to report, it's usually a pretty exciting thing. Google McDougal is down over 6% after hours. Now, based upon that after hours move, you have to assume this is a very bad earnings from Google. Well, what if I told you this was an A plus earnings from Google? Here's the numbers. Shocking. $76.6 billion in revenue. That's versus $69 billion in the same quarter last year. So which means that Google McDougal grew their revenue by, well over $7 billion year over year. So basically they're doing about a little over $2 billion more a month right now in revenue than they were at this time last year, which is an incredible number to think, okay? Like, it's not like it's a small amount of money, like over $2 billion more per month in revenue Google McDougal is doing than they were at this time last year. Incredible. Cost of revenues, they kept that in check, very nice. Research and development, they kept that in check, very nice. They did increase it by about $1 billion, but for Google McDougal, that's actually keeping it in check. Sales and marketing actually went down slightly for the company. As far as general and administrative, they kept that in check pretty good. Those numbers did grow, but it was like, for Google, this is keeping things in check. Very nice. Total costs and expenses came in at about a little over $55 billion for the company. Income from operations was over $21 billion versus the same quarter last year. They were a little over $17 billion. If we look at net income came in at almost $19.7 billion in net income versus a little under $14 billion in net income the same quarter last year. EPS came in at $1.56 versus $1.07 in the same quarter last year, folks. Take a screenshot. That's an A plus income statement right there. It's not going to get better than that. It's just not. Like, that's the creme de la creme, man. Putting up those sorts of numbers, absolutely incredible from Google McDougal. Absolutely incredible. Now, it gets even better. Here's the balance sheet for Google McDougal. What are we looking at here for the balance sheet for Google? Well, now the company has over $30 billion in cash equivalents. They have marketable securities of nearly $90 billion at this point in time, which means their cash and cash equivalents and marketable securities is nearly $120 billion, folks. Their total stockholder equity is $273 billion. So they have more stockholder equity now than I believe Mr. Softy, right? Let's go back to Microsoft. Microsoft has total stockholder equity of $220 billion. So think about this for a moment. Google now has more stockholder equity than actually Microsoft. Yet, Google McDougal trades at a fraction of Microsoft's valuation, right? Google, let me pull up the market caps of Google, and let me pull up the market cap for you of Microsoft to kind of illustrate this point of the fact that Google now has more in stockholder equity. Alrighty, folks, so Microsoft has a market capitalization right now, and tomorrow, keep in mind, Microsoft's market cap is going to be even bigger, likely, because the stock's going to likely go up, right? Although that post-market number, that can't be accurate. No, they got the number screwed up on Seeking Alpha. But anyways, market cap is a little, let's call it tomorrow, Microsoft's market cap should be about $2.5 trillion. Now, you're ready to see Google McDougal's market cap, okay? Look at this, $1.7 trillion. And tomorrow, it should likely be lower, so it's very much a possibility that the market cap is anywhere from $1.5 billion to $1.6 billion tomorrow. But yet Google has a lot more, obviously, in stockholder equity. And you could make an argument, you could make a pretty decent argument, that Google might have better growth going forward in the future than Microsoft, right? And that's debatable. I could see that, right? Now, the beautiful thing with Google is look at Google's valuation metrics. If we take a look at this company, right, it's trading about 24 times this year's expected numbers. But keep in mind, they just beat analysts' expectations. So it's very much possible that analyst numbers are too low for this year. So it could be potentially that Google is actually trading at a 23 or 22 PE based upon what they're going to earn this year. Now, also keep in mind, if the stock's down significantly tomorrow, maybe it's trading at a 21 or a 20 times of this year's numbers, which could mean it's trading at maybe a 19, 18 times 2024 numbers, right? Which makes the stock even cheaper. That's pretty incredible value for something like a Google, right? Now, there is a big cloud overhang, and I do have one, I think questionable thing in regards to Google's business model that I'm a little afraid of, and I'll explain that in just a moment because I've been meaning to explain that to you guys for a while, okay? But I think this is a big risk. I think this is going to be an overhang on the stock for a minimum of the next 12 months. There's a potential this is an overhang on the stock for the next 3 years. The Department of Justice, everything going on there, Google's in it with the government, okay? They're just one of several of these big tech companies that are going against the government right now, and it's going to be an overhang, folks. So you can't expect Google to command a huge valuation during this, next 12 to 36 months, essentially, as long as it takes to get past this government drama that's going on here, okay? Because that is going to definitely weigh on the stock and hold the valuation down for a bit. Now, with that being said, I will say I think Google's now an easy money stock for this next 12 to 18 months as far as a buying opportunity. Do I think Google stock's going to skyrocket in the next 12 months? I wouldn't say that. But do I think Google's just an easy stock to add for a long-term portfolio for the next at least year? Absolutely. Based upon the valuation metrics it's trading at, right? Based upon what the numbers are in the business model and the quarter they just reported, I mean, there's no doubt in my mind that this is a pretty easy buy for this next bit of time. It's just you got to deal with the government drama. No, there is one question mark I really have in Google's business model, and really only one, okay? And it's actually around YouTube, the platform you're watching this on right now, okay? So, where's the problem I see with YouTube, okay? I'll explain to you exactly what the problem is with YouTube that I see, okay? So, this looks at my latest analytics, okay? This is the past 48 hours for the main channel here on YouTube, right? And shorts are getting promoted heavy, okay? So look at this. These shorts are, 4 of my top 10 most viewed videos in the past 48 hours are shorts. Now, those shorts I don't even put any time into. They're just edited very quickly. They're not like a custom short or anything like that. Versus my traditional videos I put a ton of time into, right? But those ones just kind of get views for the first few days or out, maybe the first week or so, and then they kind of go down. Shorts seem like YouTube keeps promoting these, okay? So in YouTube said something about, what did they say? They said shorts was being viewed like 70 billion times, a certain amount of time. Like, it's ridiculous. Like, shorts are on fire for YouTube. It's getting a ton of views. But you got to ask yourself, are they making any money from this? Here's what I made from shorts in the past month or so. $5.55. Okay, shorts don't make you any money on YouTube unless you're getting like millions and millions and tens of millions of views in order to add up to anything, and even then it's still a small amount. Versus long form videos on YouTube can earn YouTube a lot of money, right? So now I do believe that Google, over this next year or several years, they will start running ads. And so basically you'll watch a short and then you'll flip up or whatever and an ad will play, and then you'll flip up again and an ad will play or whatever, right? So that's definitely going to be something that, and even TikTok's starting to do that now. I think TikTok's starting to put an ad in every 5 or 6, like on TikTok from what I've seen. I don't personally use TikTok, but a friend showed me recently. He's like, okay, let's see how often an ad. So he flip, and I believe it was every 5th or 6th time you got an ad on TikTok. So I believe something like that's going to come for YouTube over this next 1 to 2 years, and that will definitely help the revenue portion. But for right now, it's a lot of shorts, and really YouTube's making no money on that, which isn't the best situation, right? And it also you can argue that if somebody watches a ton of shorts and they're not watching any ads, maybe they're not watching long form content, right? And maybe that's feeding the algorithm to say, oh, these people want shorts. There's a lot of potential problems there, right? And it's a tough thing to kind of work through, a very, very tough thing to work through. I think it's much easier for Meta to integrate the TikTok type feature of shorts, right, on IG Reels, because Instagram's more like than a TikTok versus YouTube. Like, people come to YouTube to watch, usually 5-minute to 5-hour videos. It's longer form. That's what you come to YouTube for. It's longer form content, a half hour, hour long. People watch podcasts that are 3 hours long, 4 hours long. I'm one of those on YouTube, right? That's what we come to see. Long form content, not a little like 15-second, 30-second, 45-second clips, but it definitely, YouTube's pushing that down. I'll give you a great example. I typed into YouTube, this was for, one of my kids wanted to learn how to skateboard a few months ago. So I typed into YouTube, how to skateboard, right? And guess what? Instead of giving me long form videos, it gave me all shorts recommended. It was all shorts on how to skateboard. It's a very different way than if I had Googled that same word choice a year ago, 2 years ago, 3 years ago, or something like that, right? And so that's the one thing I'm a little worried about, I'm a little concerned about when it comes to Google McDougal is YouTube and the whole short situation, okay? Now, with that being said, obviously, seeing Visa's earnings, seeing Google's earnings, seeing Microsoft's earnings, am I more or less confident in Meta's earnings they're about to report, in Amazon's earnings they're about to report, right? Which Meta's going to be reporting in less than 24 hours from now, and then Amazon's reporting in less than 36 hours from now, right? So in regards to Meta first, right, which Meta is the biggest stock in the public count overall, I will say I am more confident in Meta given what I have seen from Google's earnings. More confident. I think there's a high probability Meta is going to go up after their earnings, and up quite a bit. I think, 335 is a possibility for Meta after these earnings. I think, it's potentially even higher. I think if the stock falls for any reason, it's going to be a huge buy the dip opportunity. And, I'm not super confident in that. Based upon what I just saw from Google's numbers, I don't know. Because Meta doesn't have the overhang of the government stuff. Meta had to deal with that for many, many years, but they don't have that now. And I also think Meta now has a more exciting story than actually a Google McDougal. I think Meta is actually seen as the more exciting story than many of these stocks, right? So I would say I'm more confident in Meta. In Amazon, I would say I'm actually more confident as well. Seeing the cloud numbers out of Microsoft, seeing the growth out of Azure, I think AWS is going to likely put up a pretty good quarter. And maybe people are going to say, AWS is bottom now and AWS is back on the way up. And also seeing Visa's numbers make me say I think the consumer's a lot stronger than people expect. I think we're coming out of the goods recession. And I think Amazon on the e-commerce side can put up really good numbers. On top of that, Amazon's advertising business has now become the third head of the snake, right? And Amazon's advertising business, based upon what I just saw in Google's earnings, right? I'm feeling pretty confident about Amazon's ads business. I think the ads business is going to be posting a pretty phenomenal quarter for Amazon. So overall, after what I've seen from these earnings, I'm walking away going into Meta's earnings and Amazon earnings more confident. Now, in the short term, anything can happen with the stock price, right? Look at Google. Google reports an A+ quarter. Stock is down after hours, right? And we'll see where it trades out tomorrow. But just keep that in mind because, sometimes people say, okay, I'm confident that this company's going to report good numbers and everything's going to go well. And so they want to play call options. I've tried to play that game before in terms of trying to play these short-term options and things like that. It's a dangerous game to play. And it's usually not a very profitable game because even if you get it right, you could be like, I know Google's going to beat. They're going to kill it. And so they come in, they beat on all their numbers. They report a great quarter. And then what do you get? Down after hours, 6%, right? So just because a company's going to report great earnings does not mean the stock price is going up in the short term. It's a hard thing for people to wrap their heads around. I wish the stock market was perfect and it was as simple as great earnings, stock goes up, bad earnings, stock goes down. Doesn't work that way, man. Over the long term, it does. Over the short term, it does not, folks, okay? And so I can't freaking wait for these earnings that are coming. And also I can't wait for Enphase as well because that's just a very controversial stock right now. Not one I own, very controversial, right? I will be covering Meta's earnings and the entire conference call on Twitch. So if you haven't followed me on there, make sure you follow me on there. That will be pinned comment down there. I will be covering Amazon and Enphase earnings as well and listen to the entire Amazon conference call on Thursday on Twitch. So if you haven't followed me on there, make sure you follow me on there and make sure you put on the notification. So as soon as I go live, you get a notification that I'm going live on there because, it's going to be absolute craziness. Today was crazy. The next 2 days, way crazier. Just wait to see how many people are on the live streams the next couple of days. Holy smokers, that will be no jokers. I also put together a great video for you guys a couple nights ago. It's decoding the income statement. It's about a 27-minute video that goes all into the income statement. I'll put that as a second pinned comment down there. So if you want access to that, it's absolutely free workshop I put together for you guys, just as a way of saying thank you for everybody always supporting me. And so hope you enjoy that. Hope you get a ton of value out of that. That'll be the second pinned comment down there. Much love as always. I'm ready for these earnings, and have a great day.